Hey, what's up, guys? Austin the Money here. Happy New Year. I haven't made a video since around probably the 1st, I think, or the 2nd. But glad to be back. I have took a new approach to 2025. I know I said stick to the plan. I know I said all this stuff, but I have to think of where I am in life. I will be 30 this year. Me and my wife, we're planning to hopefully have a kid probably at the end of this year or sometime next year. And honestly, in phase, the more I think about it, it's just a little too risky for me at this stage of my life, right? I'm going to have to take care of a whole nother person soon. And it's just a lot I'm going to have to do. And I don't want to be risking that much money. I want something a little more safe, a little more steady, and all that. So what I've done is I'm selling 2 cash secure puts on Nvidia. Okay, I sold these when Nvidia was at the top, which is very funny. Sold it up here. So I'm definitely going to probably take ownership of these on Friday, which I don't care. Nvidia's $3.5 trillion. Okay, $3.28 trillion right now. Top 3 biggest companies in the U.S. I don't really see this as super risky. The PE ratio is around like 53 right now. Not a super risky stock. It is volatile, but it's not risky in my opinion, as long as their growth, their earnings stay strong and all that, which it is predicted to stay strong. Their next earnings report should be in February. And if you look at Q4 2024 to Q4 2025, great growth. I mean, that looks like 50% growth year over year. So that's insane growth. That'll just lower the PE ratio as well. That's where I am. I also bought 100 shares so I could sell a covered call. So most likely when all these expire on Friday, I will, if this 133 expires in the money, then that's going to take away my shares. I sold an in the money covered call. So basically, I've already done the math. If my shares get called away, I got 515 credit for this. If my shares get called away, I'll make $182. And if Nvidia is below 133, then I'll just collect the whole 515 in 1 week, which is crazy. So I'm going to keep doing this with Nvidia, selling puts, selling calls, vice versa. Just keep doing that over. And with the premium that I'm going to collect, I'm going to start playing it safer. I know what you guys are thinking. Oh, dividends, gross. Yeah, they are pretty gross. But this is more of like a hedge right now because tech looks really weak to me. If you look at the QQQ on the weekly chart, it is a massive red engulfing candle. Tech just looks very weak to me right now. And I hate having cash. That's just, I don't know. I like doing something with my money. So I am investing in SCHD. Not all of it. Just this is what I'm going to be starting with just until tech kind of hopefully finds a bottom here soon. I got 100 shares with my money, and then the other 27 shares I've got with the premium I've collected from Nvidia. And then these are the other stocks I'm getting into as well. Large cap. This is very close to the S&P 500, basically. 1-year return of 22, 5-year return of 76. The S&P is almost exactly the same as that. And this also has a dividend yield of almost 1.2% with a PE ratio of 28. Pretty good. It has basically large caps in it, just like most of these other ETFs. So this is more of a Dow Jones dividend ETF. This is more of like an S&P 500, and this is more of a NASDAQ ETF. So this one up to year to date or past years 32% and 131% in the 5 years. This is the one if tech drops a little bit more, I'll definitely start hopping into this. I just think it's a little too early to start hopping into this yet. I think maybe there might be a little more downside in tech in the short term. But SCHG, this right here will probably end up being my main part of the portfolio, or 50%. Like I definitely want this to be like the majority because I want to be focused on growth, and I definitely want to be. This is 50% technology, Apple, Nvidia, Microsoft, Amazon, Meta, great companies that I want to own, and these top 10 holdings are 61% of this ETF, and that's why it grows the way that it does. I mean, that's insane. And then this is so this is basically like the NASDAQ, but they sell covered calls on top of it. So it gives you a fat dividend yield of 9.76% because of the covered calls that they sell on top of this. So past year, it's up a little of 11%. It was up 15% Christmas Eve. Now it's 11% a year. But if you add in the 9.5% dividend yield, I mean, that puts you at, what, 21%? 20%? So it's still really good for the past year. This is really good in a sideways market or a slight downturn market because the covered calls are going to help you a lot. But in a very bullish market, just like we've had in 2023 and 2024, this would not be good. This would not pick up the gains, right? This would give you 10%. Meanwhile, this ETF would give you 32%. But if you add the dividend in, you're still getting 20%. So you're losing by 10% if you would have just got this ETF. But we've just had two bull runs back to back in 2023 and 2024. So I highly doubt we're going to have another one in 2025. I think it's going to be more of a sideways year, slightly green, maybe like a 6-7% year in the green. So I definitely want to add this into my portfolio as well. And I'm going to just be reinvesting the dividends over time and do something like that. And yeah, and then my NVIDIA play hopefully will pay for all of this. That's my plan. My NVIDIA plays will just pay for this part of my portfolio. And if certain tech stocks can get down to certain levels, then I would definitely be interested in buying some more. But this is the account. I did add a little bit more money into it because since I'm playing a little more safer with ETFs, I don't mind having some extra money in the portfolio. But let me see. If you do this, let's just say you start with 400 shares, about $11,000, and it's got the dividend yield and the dividend growth every year. You do 30 years, your account balance will go from 11,000 all the way up to 1.2 million in 30 years. So, and that is only with adding 100 a month into it. Start with about 11,000 and just add 100 a month. Your account goes from 11 all the way to 1.25 million. That's nuts. And if you just hold it another year, it'll go up another 200,000. So you'd be over 1.4 million if you just did 31 years. And vice versa. Like the compounding effect after 30 is absolutely nuts. So I don't know how old you guys are, how much time you have. If you're in your 20s, like myself, especially early 20s, this would be a great play. Especially if you want to do more money, that's great. Maybe throw, if I was you, I would probably at least put 100 into SCHD every month, just like this. And then with whatever else you want to put in there, trade, gamble with it, trade weekly options, whatever you want to do with that, do with it. But at least do 100 into SCHD for 30 years. And you're guaranteed, not guaranteed. Obviously, if SCHD makes on average 10% a year, then, I just did 10% because that's, pretty standard. Then your guys are going to do great. But, yeah, and if you did the growth ETF that I was talking about, I mean, you could even see a lot more possible returns as well. Tech's just a lot more volatile and all that. But guys, that's the portfolio. I know it's probably not as entertaining to watch, but this is definitely what I'm going to be doing now. Basically wheeling NVIDIA and using that premium to buy shares of these 4 ETFs. These are the SCHD will probably be my main one in the long term, but right now in the short term, this is going to be the one I focus on, at least for the next couple weeks probably. And then I'll start dipping my money into this one as well. But hope you guys are going to have a great 2025. Stocks are down. I think the Qs are down a little less than 2% now. Year to date, okay, yeah, it was down almost 3% this earlier in the day. We've had a nasty intraday recovery from 500 on the dot all the way up to almost 508 now. I'm not sure why it's up over almost $2.50 in the after hours. Maybe somebody had earnings. I don't really keep up with all that unless it's, companies that I'm invested in or watching. But yeah, we had a very nice intraday recovery on the S&P and Qs. But all right, guys, you guys take care.